It is currently Sunday, November 30th, and the markets are closed for the weekend. We are looking at a closing update for Strive Inc., trading under the ticker symbol ASST, which finished the last trading session at $1.12 USD, down approximately 0.44% for the day. While the after-hours market showed a slight tick upward to the $1.14 level, the chart you are seeing represents a critical moment of consolidation for a stock that is undergoing one of the most aggressive identity shifts in the current market. This is no longer just a story about daily price fluctuation. It is a story about a fundamental metamorphosis that the broader market is still trying to digest. If you are looking at this chart and seeing just another micro-cap technology stock struggling to hold the $1 line, you are falling into the exact trap that the smart money has set for the uninformed. The expectation here is that ASST is simply Asset Entities Inc., a struggling digital marketing and content delivery company trying to monetize Discord communities and Gen Z attention spans. That is the expectation, a low-float, high-volatility penny stock drifting into obscurity. But the reality is significantly more explosive and far less understood. The reality is that you are looking at the embryonic stages of a corporate pivot that aims to replicate the MicroStrategy playbook, but with a different starting point. This is the Strive Inc. transition, a move to transform this entity into a Bitcoin treasury vehicle. The disconnect between the legacy perception of asset entities and the new reality of Strive Inc. is creating a massive inefficiency in the price action. And that 0.44% drop you see on the screen is not a sign of weakness, but potentially the coiling of a spring before a volatility expansion event. When we look at the intraday movement shown in your chart, we see a classic compression pattern. The stock opened higher, near $1.17, tested the $1.19 resistance, and then slowly bled out throughout the session to close near the lows of $1.12. To the untrained eye, this looks like selling pressure. However, when you layer in the context of the recent merger approval and the pivot to a Bitcoin-focused balance sheet, this price action tells a different story. It suggests that short-term speculators who bought the rumor of the merger are now exiting because the news is out, while a new class of investors, those looking for leveraged Bitcoin exposure, are waiting for a technical floor to form. The chop we see between 10 a.m. and 2 p.m., where the price oscillated tightly before dropping, indicates an algorithmic battle for control of the $1.15 level. Once that level was lost, the stock drifted to $1.12, which is now acting as the critical line in the sand. This $1.12 level is not arbitrary. It represents the psychological support for the new Strive narrative. If this holds, it confirms that the market is beginning to price the company not on its legacy digital marketing revenue, but on its future balance sheet assets. Let's strip away the noise and look at what is actually happening with this company. For a long time, ASST was Asset Entities, a company focused on the attention economy. They built servers, managed communities, and tried to monetize the chaotic energy of Generation Z on platforms like TikTok and Discord. It was a viable business model, but it was not a scalable financial engine that could command a massive valuation multiple. Then came the Strive announcement. The merger with Strive Enterprises is not just a change of name, it is a change of DNA. The goal now is to utilize the public markets to raise capital and acquire Bitcoin, effectively turning the stock into a leveraged bet on the world's leading cryptocurrency. This is why the expectation of a failing tech stock is so dangerous, because it ignores the fact that the company is effectively resetting its entire valuation model. When you trade ASST now, you are not trading a Discord management company, you are trading a proxy for Bitcoin adoption and corporate treasury strategy. The price action you are seeing today, that slow grind down to $1.12, is characteristic of a transfer of possession phase. The legacy shareholders, the ones who bought into the digital marketing story, are fatigued. They have seen volatility, they have seen the stock price grind, and they are using the liquidity provided by the merger news to exit. On the other side, you have the new entrants, the Bitcoin bulls, who are stepping in. But these new buyers are not chasing the price up. They are setting limit orders at support levels, forcing the sellers to come to them. This creates the steps you see on the chart. Long periods of flat trading, followed by a quick drop to a new level where liquidity is found. This dip to $1.12 is simply the market finding the next pocket of buyers. Now we need to talk about the elephant in the room that very few analysts are discussing openly, the short-selling dynamic. In transitions like this, short sellers often smell blood. They know that pivots, where a company completely changes its business model, are risky. Execution risk is high. Dilution risk is even higher, because to buy Bitcoin, Strive will likely need to issue more shares or debt. Short sellers are betting that the company will dilute shareholders aggressively, driving the stock price down even if the Bitcoin thesis eventually works out. You need to be aware of the borrow cost. In microcap stocks undergoing mergers, the cost to borrow shares for a short position can skyrocket. If you are seeing sudden drops in price on low volume, like the move from $1.14 to $1.12 around 12:30 p.m., that is often indicative of short laddering, small, rapid sell orders designed to trigger stop losses held by retail investors. The short thesis here relies on the idea that the Strive brand is just hype, and that the company won't be able to raise the capital needed to buy meaningful amounts of Bitcoin without crushing the stock price. However, this is a dangerous game for shorts because of the float. ASST is a low float stock. That means the number of shares actually available to trade is relatively small. If the company announces a major financing deal or a significant Bitcoin purchase, the demand for shares could instantly overwhelm the supply. This would force short sellers to cover their positions, buying back shares at any price, creating a short squeeze. The $1.12 level is critical here because it is likely where many shorts are trying to press their advantage. If the price reclaims $1.15 or $1.20, those shorts go underwater and the panic buying begins. Before we go any further into the mechanics of this trade, I want to hear from you. This is a battleground stock right now. Comment below, do you think the pivot to a Bitcoin treasury model is a genius move that will replicate MicroStrategy's success, or is it a desperate attempt to save a microcap stock? I want to know if you are buying the Strive narrative or if you think the shorts are right. Leave a comment with your thoughts. Let's get a real debate going in the comments section because the sentiment there is often a leading indicator of price action. Let's look deeper into the reality side of this trade. The reality is that the market is starving for Bitcoin proxies. With ETFs now available, you might ask, why buy ASST when I can buy a spot Bitcoin ETF? The answer lies in leverage and premium. An operating company can issue debt to buy assets. An ETF cannot. If Strive can successfully issue debt to buy Bitcoin, they can theoretically generate returns on equity that exceed the performance of Bitcoin itself. This is the leveraged beta strategy. The risk, of course, is that debt works both ways. If Bitcoin crashes, the equity gets wiped out. But right now, with the crypto markets heating up, the appetite for this kind of high-risk, high-reward vehicle is massive. The 0.44% drop today is noise in face of that macro backdrop. It represents a disconnect between the stock's current liquidity and its potential future value as a treasury vehicle. We also have to consider the legacy asset component. While the headline is Strive and Bitcoin, the legacy business of asset entities still exists. They still have the Discord communities, they still have the AE360 platform. While this is no longer the primary growth driver, it provides a floor of revenue that purely shell companies do not have. This creates a weird hybrid valuation where you have a tech company's revenue combined with a holding company's balance sheet strategy. The market hates complexity, which is why the stock is trading sideways. Algorithms struggle to price this hybrid model. Is it a tech stock? Is it a financial holding company? Until the market decides, volatility will remain high, and we will see days like today where the stock drifts aimlessly on lower volume. Actionable insight time. If you are watching ASST, you need to be monitoring the level 2 data.
Watch the bid size at $1.10 and $1.01. The $1 mark is the compliance level for NASDAQ. Keeping the price above $1 is crucial for the company to avoid delisting warnings. Therefore, you can expect the company to defend the $1 level aggressively. If you see the price dip towards $1.05 or $1.02, watch for sudden spikes in volume. That is often the smart money or the company's buyback support stepping in to defend the listing status. On the contrary, if you see the stock break below $1 on high volume, that is a major red flag that the defense has failed and a washout to 80 cents could be imminent. Furthermore, keep a close eye on the fail to deliver or FTD data. In stocks like ASST that are heavily shorted and hard to borrow, FTDs can pile up. This happens when short sellers sell shares they haven't located. Eventually, regulators force them to close